Olix Network 18, Mission Poshan, Bhavishya Roshan.
And today actually lower crude prices. Well, markets are starting at 10,770 or thereabouts, 760 now. So lost a bit, but still a third of a percent higher, more than 0.5% higher, but it's quickly getting to 0.5%. 10,750 I think is where it may be a more legitimate way to say the market open. 0.5, 0.6 higher. And the Sensex is opening 250 higher. That's again 0.65 higher, 2/3%. Bank Nifty is opening really tall, and that's my sense is the HDFC effect. I mean HDFC Bank effect. The window is open, and there will be a lot of buying for HDFC Bank. That stock is up about 2%, 1.6% higher. But remember, those who buy excess will have to sell it in the next 5 days. So those who are just taking positions, be wary of that. FIs could rush in and then unwind or sell off later on in the day or in the week. But HDFC Bank, such a giant in the Nifty Bank, 30% of the weight, and therefore it's pulled the index up about 0.9% at this point in time. From 1%, it's come down to 0.95. Okay, others that are doing well, Dr. Reddy's, the good news about the Srikakulam plant, no observations, up about 2.5%, and then the private banks are doing well. IndusInd Bank, banks everywhere after the US jobs data. So IndusInd is higher by about 2%. Other stocks, Tata Motors up, HPCL up, BPCL up. All the crude stocks, crude-related stocks would be up, with crude falling off, but now down about $4 from the dreaded $80 mark. So GAIL, IOC, BPCL, HPCL are among your top 10 gainers. HDFC Bank is also up there, 1.5%. HDFC is up 1%. Coal India, excellent production numbers, 47 million tons, something of a record actually for the month, and that's up about 1%. It's already done a lot of the heavy lifting on Friday. Kotak Bank again up 1%. Hero Motor, good numbers again. That's what, over 7 lakh vehicles in a month. That's up about 1%. Bajaj Finance, UPL, Bajaj Auto, Titan, L&T, all of them up over 0.5%. Small Red Brigade, which is Adani Ports, Asian Paints, Grasim, SBI. Where is ICICI? Is it green or red? Just pull up ICICI. Market is indecisive.
Yeah,
okay, 0.5% higher actually. Go ahead, mid-caps.
Okay, well, the mid-cap index is fine. It's up about 0.3%. The market breadth is good. But, you know, I must say that the quality of the gainers are a bit suspect. I mean, you have 1% beverages, Vakrangi, Anantra, JP Infra, all rallying anywhere between 5 to 10 odd %. So just be a bit cautious there. In fact, now the mid-cap index is coming off a little bit. In terms of some stocks in the news, Whirlpool is gaining. Remember, it signed a JV with Elica to expand its cooking business. In any case, that whole space has done pretty well, consumption. Canfin Homes is up in the green, fundraising there. Coal India has been doing pretty well lately. You spotted that. Saturn Credit Care is one stock. The management was quite positive when we spoke to them on Friday. It's up about 4.5 to 5 odd % today. And on the downside, VST Tillers reported a weak set of numbers in the month of May, second month in a row. So VST Tillers is down about 1.5 odd %. But stripped of that, the auto space is doing pretty well because, you know, names like Hero MotoCorp, etc. have come out with good numbers. In terms of a couple of more stocks, M&M has been surging higher by the day. So today, once again, M&M is in the green, up more than 1% right now. So the opening is good, but the mid-cap index, Lata, has come off and it's now flattened.
Absolutely. Well, let me take it to Ashwini. Ashwini, this opening doesn't interest you in the Nifty either ways?
The HDFC Bank has opened 1%, so it's not like people are rushing in. So that way, you know, with a stop near the high of the day, both Nifty, Bank Nifty, if I had to trade, would be shorts rather than longs. And as I pointed out in the morning, that the mid cap is where the juice is, and that's where people should assume short positions. So maybe get short on a Century, BEML, etc. That is where you are getting clear downtrends. Chances are mid caps very soon will be back into the red territory, and the rest of the Nifty, Bank Nifty, etc. will probably just hang around.
Okay, I thought it will get into the red even before you complete your sentence. BML, of course, was a sell with Sudarshan and with Ashwini. Century Textile as well. Ashwini's short is down 1.5. Sudarshan, anything you're spotting now?
Well, yes, I am buying the Nifty, just waiting for it to cool down.
Okay.
And I would be long in the Nifty. ACC is a short sell. And that applies to other cement companies, Ultratech, ACC, both are intraday shorts.
Your Nifty long is an intraday or is that more positional?
If the index closes strong, it becomes positional. If it doesn't, we'll get out by the afternoon.
Okay, well, Dr. Reddy's is picking up quite a bit right now. So it's actually the biggest Nifty gainer, up about 2.5%. Mitesh, any quick thoughts from your end?
Yeah. I have, in fact, all crude-related stocks on my radar right now.
Okay.
I think both the paint companies are looking weak. Between the two Asian paints looking weaker on the intraday chart, so that could be a good sell for 1-2 days. And I like BPCL on the long side. Plus, Dr. Reddy's, which Sonia just highlighted, I think that's clearly showing momentum and could head towards 2050, 2060 odd levels.
Okay. Thank you, gentlemen. We are, of course, going to come to you repeatedly later on in the day. Then stay back for a bit more. Well, you know, this perennial conundrum. For the month of April, the mutual fund numbers we got shows selling, net selling by the mutual funds in debt. Clearly, not I think May. It was selling by the debt mutual funds as well. I mean, money continues to come. I think some 13,000 crores into the equity funds. What do you do at this juncture? Where does one put the money?
You know, you're seeing clear signs of this, of where the money is going. I mean, if you just look at the May equity performance, quality is sucking in all the money. It's basically the mutual fund manager's way of saying that there are risks ahead for the market, valuations are high, we are running into an elections where the result is uncertain, and there are wild cards like crude and maybe RBI hike in interest rates, which is probably lying ahead. In this kind of a scenario, it's not prudent to take more risk in your portfolio, neither on the mid-cap front, nor on any of the questionable quality large-cap names. So what's getting in the money? HUL, Asian Paints, Bajaj Finance, you know, Kotak Mahindra Bank. These are the kind of names which are sucking in the mutual fund money, and therefore the index is doing quite well. But underneath that, I think the broader market is getting narrower and narrower because people just don't want to take risk in this kind of an uncertain environment, which is why the small cap index is down 20% year to date, and that's not a small cut. So I think to answer your question, the money is just going into quality because people want to be defensive now.
Okay, I just wanted your thoughts quickly before we let you go, Udayan, on what to expect from the policy this week. I mean, the expectation is that there could be a rate hike, but from a market standpoint, you think any impact at all?
I don't see major impact. There might be some sentimental impact if the RBI sounds too hawkish, which it may, or it may just choose to wait for the next policy before it becomes explicitly hawkish or takes a rate hike. But the point, Sonia, is that market interest rates have started to go up already. I mean, they started a while back. First, the bond deals hardened, and now the banks are raising their rates in any case. So from an actual point of view, on the ground, interest rates have already gone up. I mean, whether the RBI signals it or not. So I think it's a headwind for the market, no question, at a time when we are just seeing the nascent signs of recovery. And it is one more of those, along with crude and politics, which the equity market will have to navigate. So I think the outlook for the next few months, till we get to the December elections, is that you stick to quality, you don't get too adventurous, and hope that you end the year with modest, maybe even 4-5% or 3-4% kind of gains, and preserve the capital to play in case you get a much bigger opportunity around the central elections next year.
Okay. Thank you very much, Udayan, for joining us this morning. And of course, we'll touch base with you later on in the month. Okay, with that, let's invite our market master for the morning. Pramod Gubbi, Head of Equities at Ambit Capital, joins us now. Pramod, good morning. Thank you very much for joining us. We started off with such gusto this morning, with US giving us such good jobs data and Nikkei giving us a 300-point salute. But the Indian markets, at the starting point was the highest point of the morning. It's given up gains. What are you feeling about the Sensex levels or the Nifty levels at 10,750?
Yeah, I mean, it's been a bit dichotomous in the sense that while the index has broadly remained stable, we've seen significantly deeper corrections outside the index in the broader market, particularly in mid and small caps. You know, we would rather hope that even some of the large cap names correct a bit before it starts getting attractive from a valuation perspective, particularly given the sort of headwinds that we're facing from a macro perspective. we would like some of these names to be a little more cheaper than what they are.
Okay.
So from an entry point perspective, I would expect, or rather prefer, some more downside from levels.
Okay, well, yes, you would like them to be cheaper, but I don't think the market is going to oblige. This entire consumption space is really picking up right now once again. So, you know, Nestle was the stock that Ashwini was talking about. That has hit a new high today. So let's pull up Nestle for you. Pidilite has once again topped the charts. It's up 2.5%. It's very close to its new high. Whirlpool is also doing very well because of that news flow. Bata is up almost 2%. Pramod, hi, good morning. Do you like this space still, despite the stretched valuations that many of these companies are sitting on?
Yeah, I mean, consumption is pretty much a structural trend or theme in India, and that's unlikely to change given the demographics. And of course, we need to put in place policies to help job creation, income generation, and so on. But by and large, I think you know, very few people doubt the sustainability of consumption, given the sort of long growth runway that we have. So to that extent, yeah, you can sort of overlook the valuation, given the longevity of the growth prospects of this sector. But more importantly, given the juncture that we are ahead of an election year where there are likely to be significant spending, both from the government and political parties, and hopefully looks like we're going to have a decent monsoons as well. And with a couple of policy support from MSPs and so on, I think consumption generally, in particular rural consumption, look pretty strong in terms of delivering earnings growth, whilst the rest of the market, you know, earnings growth looks like hard to come by just when we thought we're on the uptrend, given inflation and commodity prices eating into margins. So this is one of the few pockets where there are earning growth, and we continue to be positive on consumption.
Okay, let me ask you a more personal finance kind of question. You know, you as well as Udayan, you'll have been a little wary of whether you should buy at these expensive levels. But you know, the money is coming and global growth is very good. At least the bullishness is unrelenting. What should an Indian investor do with his money? I mean, someone who's managing his own money, should he just put it in FD, stay in cash, or and anyway they're earning a little more than they used to? Or do you think you actually venture and buy all these Pidilites and you know, the Godrejas, the HULs, the safe stocks, so to speak?
Yeah, I mean, it depends on various factors, but I guess generally as a layman investor, you know, we would recommend you know, taking a more systematic approach to investing, rather than trying to time the market, which is in any case very hard for the professionals themselves. So I would rather not take that call, and particularly if you have a relatively long-term horizon, I think you can still afford to take those bets in companies such as the ones that you mentioned, which have a long track record of delivery over long periods of time. I don't think any of that should change going forward. So if you have visibility over 5 to 10 years, then I guess even at these valuations, some of these names, I mean, ideally you'd like it cheaper, but then, like I said, the sustainability is quite evident, and hence, you know, if you don't mind being parked in those names.
Okay, actually, I wanted to ask you also from an FII standpoint, what are people saying about this MSCI warning, so to speak, that by November they put out the discussion paper and they're saying that they're going to cap the India exposure or the India limit because of this SGX NSE imbroglio. I mean, will they carry out that threat? Will global funds follow suit, or will they be impressed if the India story then starts firing? What are FI saying at all?
I think the active investors, it doesn't matter so much. Yes, of course, the benchmark changes and hence your performance against the benchmarks to that extent, but I think it's at best affecting at the margin. But for the passive funds, which is increasingly becoming large globally, and also the ones coming into India, so the ETFs, it will definitely affect the sort of you know, money being allocated to India as a market vis-a-vis other emerging markets. So the ETFs, we tend to compete with other EMs, so any sort of an action from MSCI can have an impact on flows and hence sort of valuations. But you know, I would tend to agree that you know, maybe MSCI may not carry the threat all the way. It doesn't make sense given all other fundamental factors for India remain fairly strong, at least on a relative basis. So maybe the reality will be somewhere in the middle.
Okay, would you buy any of these monsoon-related stocks? I mean, we did get some pre-monsoon showers in Mumbai, and now I just read the IMD put out that, between June 6th and June 8th, you'll get monsoons in Goa, Maharashtra, etc. Is this a theme that you've, in general, been bullish on or made money in over the last few years?
Not so much monsoons. Monsoons, of course, we've burnt ourselves trying to predict it over the years, but more or less, if you assume there's a normal monsoon, beyond that, I think we've had significant indicators of how the government is going to approach the rural economy. Yes, there is an element of distress. We're coming out of that distress, so there is a need for the government, irrespective of whether it's an election year or not, to address that distress. So there will be spending there. Add to it the election dynamics itself. So there will be significant spending in the rural economy in general, whether agri or non-agri, and you will see the benefits of that flowing into stocks which are exposed to that that thematic, particularly consumption, like I mentioned. And at a time when you're facing so many headwinds in terms of inflation and so on, some of these companies which have the brand to push through the pricing power, to wait through these input cost inflation, perhaps a better place to get parked. You have the growth visibility at the same time, the pricing power to sustain margins. So for the next 12 to 18 month perspective, it remains a very good sector.
Okay, well actually, can you believe it? It's raining cold water on the our enthusiasm for HDFC Bank. It's minus 1.5% at this point in time.
Okay.
So we thought there is this 4 crore shares which FIs are going to gorge on. Yeah, but looks like all that happened, and now people are worried that people will have to sell off if they have taken excess positions. I don't know what. It's very good volumes for sure, but I think is it the highest volume in the market? It's traded the highest volume, and way 4 times the average daily 10-day average volume on HDFC Bank shares. So people just went in, bought, looks like, and then have taken a call. The market itself is cooled off significantly now, and while we started with an advantage for the advancing stocks, now it is 1.3 stocks declining for 1 stock advancing. Yeah. You must pull up the red and green lines. I mean, they've crossed, and how? No, it'll help if you can pull the graph. I can see the numbers, but the graphs will be more helpful. That since early morning we've crossed very quickly over to the red side, as you can see, barely held it for 15 minutes.
And you know what? What could be worrying is a lot of the non-index large caps are falling today. But the likes of Bharat Forge, Torrent Power, Endurance, V-Guard, Prestige Estates, all down about 2 to 4%. Pramod, this has been the problem with this market, the fall that we've seen in mid-caps, even some of the larger mid-cap names. How do you approach it? Do you stay away from this pocket entirely, or are there still a lot of quality stories here where you would be buying at this moment?
Yeah, I think again depends on the horizon. If you have that luxury of looking at the long term, I think there are still some very good stories there. And given the sort of correction we've seen, it's no longer that expensive as they used to be, say 6 months ago. But having said that, I think for the relatively shorter to medium term guys, I think there are 2 dynamics need to watch out while investing in small and mid cap. One is more fundamental, where generally I wouldn't say it's across the board, but generally if you're in the small and mid-cap space, you don't tend to be market leaders, and hence the ability to push through input cost inflation is relatively limited compared to a market leader in that sector, and hence you're likely to see some pressure on margins as the commodity price inflation feeds through your inventory and your raw material prices. The second dynamic is more technical in nature, given the state of the markets. I heard one of the other experts on your show talking about this dynamic as well, which is most funds in the wake of the sort of liquidity they are seeing in the fund flows they're seeing, and yet they have their own skepticism about the sustainability of these valuations. Are beginning to prefer large caps given the sort of liquid nature of their investments, and so that in case they see any sign of trouble, it's easier to protect their portfolios as opposed to being stuck in very liquid mid-cap names. So there could be a technical factor which goes against to small and mid-cap investing, particularly if you're looking at a short to medium-term perspective.
All right. Well, we leave it at that. Pramod Gubbi, always a pleasure speaking with you. Thank you very much for joining us this morning. Okay, it's a sign of times. The markets could not fire up despite global cues being so positive.
Yes.
And look at the bond market. It had everything going for it today. Crude prices off $4 from their highs and definitely off even the Friday levels. The rupee opened strong, which means you're importing things cheaper in rupee terms. But in spite of it, the yields opened at 7.88, 3 basis points higher, and even now stand at 7.86. So no one wants to buy Indian bonds. That's the message you're getting, no matter what good news you throw at this. And very good GST numbers.
Yeah.
You know, 95,000 crores, 94,000 crores, 5% higher than the average for FY18. All these are positive for macros, but no one wants to buy bonds.
No one wants to buy equities either. I mean, it's not just HDFC Bank, but it's also TCS, HUL, SBI, ONGC that are all in the red. So not looking like a good day at all. Let's do one thing. Let's take a break. But on the other side, we'll talk about something positive. Tech Mahindra, the stock has been outperforming its frontline peers. We'll touch base with Vineet Nayyar, the vice chairman of the company, for the latest on the ground.